Hello everyone, Tuesday, March 15. So we have two accounts to review today. Let's open up the virtual server we have here. So I will start um, with the chart review with gold. So you'll see that's daily. So we didn't move much today. So this red candle here, it's still red. And it's not clear enough, to say if we should expect market to go low or maybe come back up at this time on a low time frame. So we in a small range here, so it would be difficult to predict anything, but we do not predict here, we just trade the trend. So let's see, let's check the gold account first on TradeStation, and you'll see the equity actually went a little bit down since yesterday, and our balance, we went a little bit up. Looks like one position was closed on profit, but it's okay. That's the way we trade. We slowly building equity and it goes up and down. That's totally fine. Let me see on open positions here. So we didn't really make any progress here, so we didn't hit any stop. Let's see if we want to move stop or not. I think that that's a good level, so that will remain 1239. So if we break this range high, we'll take that profit. If we continue low, then we might move it tomorrow. Let me see. So we actually don't have any news on this front because we have every 500 pip position open down, 45 here. Well, you see we closed one open. No, actually we didn't. So 45, 50 at 1240. Okay, so let me just go back. 1240, yeah, but that was the position which was open at 1240. It was actually closed on profit with the stop, and I don't want to do anything here, so we'll just let it run. And yesterday we had all orders set up, so that will remain the same. So today we don't do anything, we just wait what will happen tomorrow with gold. Now let's take a look at Australian dollar, Canadian dollar on the daily chart. Well, here you see the same thing. Even though we closed red yesterday or today, because technically this is a new day, we didn't really break anything. So hopefully tomorrow we'll get lower, or maybe we'll go higher. I don't know. But if we review our account, so just making sure that our currency expert advisor is running, smiley face. Here you'll see that we decided to trade 10k lots every 20 pip, and these are open positions. And here's I want to show you one indicator, which is I found is pretty helpful. That called eye exposure. So I want to move it, attach it to the chart, just do default settings. So what it does, because on MT4 it's not obvious what is your balance on the positions open and closed, but this kind of gives you a quick summary. So you see sell lots is 10 and buy 30, and the net is 20. And well, right now it's easy to see, but when we have many positions open, this tool is very helpful to see what's the balance, to decide, if we want to push on the long, on the short side, to protect ourselves. Okay, so here we didn't move far, so it's 99. Even this didn't change, so we pretty much stayed in a very tight range. And we a little bit negative right now because we opened long positions, and now we kind of rolled back a little bit, so we have a little bit of loss here. So it's equity shows 99, like $40 short from original deposit, which is fine. It's usually when we launch this strategy, this expert advisor, the way it works, it will open positions, start from this level, and it might show us something like that, a little bit negative, but over time, when this range breaks and we start moving, so that will change. Just want to show you here something. This one of the reasons why this currency pair is not perfect. Well, nothing is perfect, right? But here you will see, even though we didn't take any profit, we didn't do anything, but there is something called rollover, and that's an uh, overnight fee which bank will charge on every position open. And for this particular pair, it's a little bit higher than others because of the interest rate. So we know that Australian dollar has a high interest rate, Canadian dollar is lower, but the difference shows here. So every market renewal, if you will, like every market close and open on the next day, the bank and broker will charge for the open position, or they will actually pay us depending on what the difference between two interest rates on each currency. So here you'll see that for the long position we were actually paid 22 cents, and for this and that, and for the short we would charge 47. And it's never even, because we pay for leverage as well. We use leverage when trading forex, and we kind of borrow that money for the leverage from the bank, and they obviously charge us a fee. So that's why when you look into rollover, usually the negative side, the something we pay to the bank is higher than what bank pays us. So it's not a huge amount, but it will accumulate over time. That's why we should be careful, and we should keep that in mind, that there's a rollover fee, and over time it will cost us money, or we can make money. Depends on direction. Okay, so in this case, with our currency, I don't do anything. We just review it. So we just make sure that everything is up and running, that those trades actually were opened by expert advisors, so we didn't do anything, and they're pretty accurate too. So if you see at the price, so this one was like very right to the pip. This one was like really close to pip away. Not actually to pip, just 0.06 pip away. This 0.02, very very small difference, because when this program opens position, it sends the market order, and it kind of requests specific price, and this is working a lot better than market than limit order, because on the limit order we can have a slippage, which can cause, which can result in a different price. Okay, so I will wrap up here, because we didn't have much market movement today. So market doesn't move every day, which is fine. We're just being patient, and we'll wait what happened tomorrow, and I'll send you another update tomorrow. Okay, bye.